Welcome back everyone, and in this video, we're going to go over the high growth company that Ark Invest has been heavily buying into over the past month. This major growth company absolutely exploded in 2020, but as of late, they are on a major pullback. Ark Invest is buying this dip and loading up, purchasing hundreds of thousands of shares of this major growth company. So Ark Invest is an ETF manager that has a bunch of different funds that are known for investing solely in disruptive innovation. And these are the companies who are changing the way we live our everyday lives. And Ark Invest has grown in popularity that they now own the largest actively managed ETF on the market, taking that crown away from JP Morgan Chase. And their largest fund, their ARKK, now has close to $9 billion of net assets under management. And Ark is growing in popularity for good reason. All of their funds are grossly outperforming the market, and Ark's innovation ETF has grown by 148% over the past year. Their Ark Next Generation Internet ETF is up 154%, and ticker ARKF, their FinTech ETF, is up more than 107% over the past year. All of Ark's ETFs have been outperforming the market over the past 5 years, and they have really grown in popularity as of late. But there's one major company that Ark has been loading up shares on over the past month, and that is Zoom Video. Ticker ZM currently trades around $337 per share and is up close to 400% on the 1-year chart. But if we take a look at the 6-month chart, from their 52-week high at $568 per share, the company is on a major downward trend, declining more than 40%. So what we're going to do in today's video is evaluate Zoom Video, take a look at how many shares Ark Invest has been buying into over the past few weeks, and discuss what we believe Zoom's going to do over the next few years. We're going to go over some future growth outlooks, take a look at the company fundamentals, and overall give my personal opinion and my perspective on this business over the next 3 to 5 years down the road. I am the Gen Z Investor, and if you're new to the channel, please hit that like button and subscribe. I post every single day about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. And in today's video, of course, we're going to take a look at Ark Invest and their major buys of Zoom Video over the past few weeks. So please hit that like button and subscribe. And we're going to continue on with Zoom Video and the major buys we have seen since the end of November 2020. So if we take a look at this chart, at the month end of November 2020, Ark Invest held 260,000 shares of Zoom Video. But you can see through the month of December, every single week, the amount of shares they owned were going up. And they actually ended the year of 2020 on December 31st, owning 804,000 shares of Zoom Video. So they went from owning 260,000 at the beginning of December to closing of the month with over 800,000 shares of this company. And you can see the yellow line represented on this chart is the share price of Zoom. So at the end of November 2020, the share price for Zoom Video was $478. And you can see throughout the month of December, they trended downward, averaging around $400 per share before hitting record lows, and now trade around $337 to start 2021. And if we take a look at the 1-month price chart, you can see Zoom Video is down close to 30% over the month of December. So the company's on a major pullback as of late, and Ark Invest has been heavily buying this dip. So I put together a very simple spreadsheet to show how many shares and the approximate value Ark has spent buying into Zoom Video over the past month. So you can see they ended December 31st, 2020 with 804 shares of Zoom Video. And at the start of the month, they had only 261,000 shares, which just means they purchased approximately 543,000 shares of Zoom in the month of December 2020. So if we take that 543 shares and we do an average value per share of $375, Ark Invest purchased over $203 million of Zoom Video in one single month. And where we got this 375 is if you take a look at this price chart, you can see as they started to buy into Zoom Video, the average price for the first few weeks was around $400, dipping then below $350. So I just took the middle of those two values and took an average estimate of $375 per share, which would equate to over $200 million of investment going into Zoom Video in one single month. So Ark is known for being right. They've proven to be right over the past 5 years, and Zoom Video is a company that actually has some strong fundamentals and may continue to surge down the road. And a lot of investors who are still bullish on some stay-at-home stocks believe this 30% decline came down too hard and too fast, and Zoom can actually recover and see record highs over the next few years. So now we're going to take a look at Zoom and the case for why this company may continue to grow down the road. This is just a very simple analysis. We're going to go over some trends in the market regarding working from home that may have some positive outlook for Zoom Video, and we're going to take a look at some analyst expectations for this business down the road. And finally, we're going to wrap up the video by deep diving into their core fundamentals and their financial statements to determine the health of this type of business. So even as the vaccine begins to roll out in 2021, it is estimated that 1 in 4 Americans will still be working remotely this year. So around 25% estimated of the workforce will still be working from home and virtually commuting. So that's still a large amount of people using these digital stay-at-home softwares, even though the vaccine is getting rolled out. And it is estimated by 2025, over 36 million Americans will be working remotely, which is an 87% increase from pre-pandemic levels. So even though the vaccine is coming out and we may go back to normal over the next few months and few years, it is still estimated that over the long term, individuals will be spending more time working from home than ever before. And if we take a look from this new work from home setting, nearly half, or over 46% of people employed this year did do some work at home. They may not be permanently working from home, but because of the pandemic, at some point, they did do some work at home, and that represents nearly 50% of the workforce. And that's absolutely incredible to even imagine. Over 46% of workers at one point had to use a type of company like a Zoom Video or any type of digital communication platform to communicate and work from at home. And remote work is a trend that is expected to be permanent in a lot of major companies. And they're expecting at-home work to double in 2021. So although the economy may be getting better, we may get a vaccine, we may be able to go back to life as normal, it still comes to a reality that individuals from now on in the future are going to be spending more time working from home. And although it may not be as large as we saw at the height of the pandemic to start 2021, individuals forever and now long into the future are going to be working from at-home offices, and services like a Zoom Video will always be in demand moving forward. And the trend of working from home is not solely based within North America and is actually expanding all across the globe. If we take a look at Zoom's latest quarterly report, you can see that their total revenue, 70% of their revenue over the latest quarter in Q3 of fiscal year 2021 came from the Americas, and that's shown in light blue. And the rest of the world represented 70% of their revenue. So a company like Zoom is actually nicely globally diversified. They have revenue coming in from all across the world and are not solely based within the United States or only North America. 30% of their revenue over the latest quarter came from the rest of the world, and you can see the rest of the world year-over-year growth has seen 629% acceleration, much higher than the growth rate from North America. You can see right here how small back in 2020 the rest of the world made of Zoom's top line revenue, and over this latest year, it has rapidly expanded, now making up close to 70% or more of total revenue for their business. So this global remote work has been a large trend, not only within North America, but it's been expanding all across the globe. And future revenue for the company has been accelerating at a fast rate as well, and they have been proven to grow their rapid cash by over 500% year-over-year growth rate in operating free cash flow, and total free cash flow on the business now sits at over $388 million, a 600% year-over-year increase. So the pandemic and the work from home environment has sent shares of Zoom Video absolutely skyrocketing in 2020 and to start off 2021. So although the company has seen a major pullback as of late, shares are still up close to 400% over the past 12 months. And this company is now trading at more of a reasonable valuation. If we take a look, their trailing 12-month PE currently sits at 234. So of course, that is extremely high comparing it to traditional investing metrics. But what we learned in 2020 is a lot of these high growth companies are no longer trading at the traditional metrics of PEs below 30, below 25, and they're not really based on traditional value metrics of analyzing a stock. These companies trade at very high multiples and will continue to do that for many years down the road. But if we compare the current PE of 234 compared to where the PE has been over the past year, you can see this chart is actually showing Zoom. This is being traded at the most reasonable valuation we've seen over this past year. To start off 2020, the PE on this company was $847. But as we've seen a surge in earnings and as of late the price decline, it now sits at a much more reasonable PE of 234. And if we take a look at the forward PE from Seeking Alpha, so this is an estimation of forward earnings, it currently has a forward PE of 116. And to give you a little bit of perspective, Amazon currently trades at an estimated forward PE at around 95. So of course, I'm not comparing these two types of companies, but I'm comparing the type of industry they work within. These are very high growth tech companies. They're expanding, they're in growing industries for many years down the road, and they actually trade in a similar range of forward PE levels. So this forward PE of 116 is actually a little bit more reasonable than where we've ever seen this company, and I kind of understand why Ark Invest is buying in at this current valuation and over this latest dip. And if we take a look at some future expectations for down the road, next year in 2022, we expect close to 38% top line revenue growth on Zoom Video. Over 25 analysts were surveyed, and they estimate average revenue to come in at over $3.5 billion, representing close to 38% year over year growth. And if Zoom can post these numbers, I'm sure we will see the share price sit much higher than where we sit today, and Ark Invest may be heavily rewarded. And the 12-month price target for Zoom Video sits at $487 per share, which represents close to a 45% potential upside from where we sit today. So analysts are still expecting this business to recover over the next year and trade back higher to close to that $500 range. So Zoom Video is definitely a company that I believe is here to stay. Over 25% of the workforce is expected to stay remote in 2021, and over the next 5 years, that trend is only expected to grow. I believe Zoom Video is still a major company, will remain a major player, and I think this major pullback that we've seen of over 40% from their most recent high actually may be an attractive price point to get into this company. We may see it drop further if we get more positive vaccine news and the economy starts to reopen. This company may see some short-term decline, but over the long term, this may continue to be a winner, and a lot of investors are still bullish on this business down the road. But now we're actually going to take a look at the financial statements of Zoom to see how fast they've been growing, and we're going to take a look at their balance sheet to see if this business is sustainable. So first, we'll start off with the income statement. So you can see total revenue at year-end 2018 was $150 million. That more than doubled in 2019, close to doubled again in 2020, and over the past 12 months, they have close to $2 billion of total revenue. So they've more than tripled their revenue over the past year, and you can see the latest 12 months has been absolutely incredible for their business. If we take a look at net income and their profit, you can see they were losing money back in 2018, but they have absolutely grown their net income by an exponential amount and now sit at over $427 million of net income over the past 12 months, which is absolutely incredible. And for a lot of tech companies, they have high net income profit margins, and Zoom has just that. You can see around $427 million of net income on just below $2 billion of total revenue, which is great to see. And now if we take a look at their balance sheet, this business is actually very healthy. You can see they have total current assets on the balance sheet right now at $2.6 billion. And if we compare that to their total current liabilities, they have a nice solid current ratio sitting very close to 1.5, and the total assets for this business set at over $3 billion. Meanwhile, they only have around $1.5 billion of total liabilities. And one great sign is that they have actually zero long-term debt on the balance sheet. So they really don't have any debt. And the fact that their total current assets and actually their total current cash of $1.8 billion on hand right now is enough to pay off all of the liabilities in total for this business while still having over $300 million sitting in cash. So I really like their short-term financial position. They're very strong, they're a nice tech company, very low debt level, and debt is what really can kill a business early on. So although Zoom may not be considered an early company or a young startup anymore, but young debt can actually kill a business. And the fact that Zoom has very little to no long-term debt, the short-term current liabilities are very manageable. I really like the balance sheet. I think they can be very sustainable over the long term. And another great sign is that total equity is growing year over year and has reached a record high at around $1.5 billion, which is great to see. So the balance sheet as a whole for Zoom Video, I believe is very strong, and I think this company can maintain operations over the long term. I like the reduction of debt. I like that they don't carry any long-term debt on the balance sheet whatsoever, and their large profit margins, bringing in over $420 million of net income over the past year, I believe has really set the company apart and can make it a long-term sustainable tech brand for many years down the road. So Zoom Video has seen a massive growth in 2020. This pandemic has really accelerated their business by a decade in advance, and you can see this company has really reaped the rewards. Ark Invest has been heavily buying in over this latest dip, and the company is still down around 40% from their most recent high. So definitely a company to take a look at over the next few weeks. If it continues to downtrend, we'll follow to see if Ark Invest will continue to buy more shares. And this may be a company you want to add to your growth portfolio if you believe it can rebound and if you think it will still be a major player in the digital communication space for many years down the road. So we're going to close out today's video. Thank you for watching. I am the Gen Z investor. Today we discussed Zoom, the company that Ark Invest has been heavily buying into over the past month, one of the largest communication companies in the world that has seen a rapid surge in 2020. Let me know down in the comments if you are shareholders of Zoom or if you're going to be buying more shares over this 40% dip. So thank you for watching and see you in tomorrow's video.